In this session, we're going to be going through Launceston in Tasmania, and I'm going to be walking through some of the performance to date and some of the leading indicators, and then we'll look through a case study as well. Before we get into it, a quick advice disclaimer. This is not financial advice. Please seek personal and specific advice on your financial situation before you go acting on any of this information. It does not constitute financial, legal, or tax advice. I'm a qualified property investment advisor under the Property Investment Professionals of Australia. I have a degree in financial planning. In the grand scheme of things, I'm only providing specific property advice and not financial, legal, or tax advice. So please consider your financial situation as we discuss this. So moving on, look, in this session, I want to go through Launceston in Tasmania. And what I want to show you is a little bit around the median price point here in this map. As you can see, we're sitting at a median price point of just under $630,000, and it's roughly the same throughout Launceston. We're sort of looking between $500,000 and $750,000 there. There's not too much difference in the shading there. When we look at the total number of property listings on the market, typically Launceston over the longer term period has had a high number of stock on the market. And you can see there's been a large downward trend as we approach the end of COVID there. Launceston was in high demand and in low supply towards the end of COVID in 2022. However, the number of property listings has increased over the last few years, and we seem to have come to a bit of a peak towards the end of 2024, with the number of listings showing a bit of a trend here now. We're at a peak of roughly 15 to 1600 property listings, and now we are at a short-term low of just under 1400, which is the shortest that we've seen since the beginning of 2024, roughly. In terms of gross rental yields have actually come down, especially for two-bedroom units. Let's get rid of the units for the time being and just concentrate on the houses. We had a high of roughly 6% in sort of middle of 2020 and even 2021 here. However, rental yields for three-bedroom and other houses here, we're sitting at a roughly 4 to 4.5%, and that's been the same or similar since the beginning of 2022 there. At the same time, rents have been somewhat stable over the longer term period. Getting rid of the units, we just have a look at house prices here. They've been sitting at just under the 500 mark for a fair while. However, rents have started to increase over the last few months now. You can see we've hit a rental high of $534 for the average home, and just under that for a three-bedder as well, $510 for a three-bedder. In terms of vacancy rates, we did hit a peak of just under 2% there in middle of 2023. However, we are getting at relatively low levels now of 0.5%, which is ultra low. The Australian average vacancy rate is roughly 1.2% at a national level. So if we take that into context, we are much lower than average here in Launceston. Property prices are starting to increase over the last few months as well. We've come from roughly 600 to 675 for all homes. And then in terms of three-bedder, we have come from roughly 550 to just under 600, according to SQM research, which takes into account the asking price for properties. Over longer term, we've seen an 8.8% year-on-year growth factor for the last 10 years for all homes. When we look at short-term performance, you can see some suburbs have had meager growth over the last few months in the 0 to 3% mark here. Trevelyan, as an example, you can see 0.5% in the last 3 months. When we look a little bit longer term, the house value index over the last 12 months, similar story. We've seen sort of 0 to 6% in some areas, 1.2% over the longer term, 3%, 0.5%, and 1.8% in the surrounding areas. If we look at rents in Trevelyan, as the SQM sort of indicated, we're looking at around about $536 as a median. Launceston itself, $550. So between $500 and $600 there as an example. Rental change over the longer term, over a 12-month period. Some areas have seen rental increases of 0 to 5%. Again, looking at Trevelyan, we've seen a rental increase of 4.4%. In other areas, 2 or 3%. If we look through some of the recent sold properties, this is a property that's sold that's relatively close to the median price point, just under $660,000. 3-bed, 2-bath, 3-car, brick home, somewhat of an older property. It looks like a 90s build, maybe late 2000s, early 2000s, right, on a relatively decent block of 750 square meters. We are looking at a rental estimate of $580 per week. There we go, built in 1991. Upfront costs for something like this, you're looking at just under $30,000. So if we take this into account in our projection, $660, estimated rent of $580 per week, let's say an 80% loan, property expenses at $10,000, which is your council, water, insurance, and property management expenses and a few other bits and pieces. Okay, so we're going to assume that expenses are going to grow by 4%. We're going to assume capital growth of 6%, which is fairly conservative, rental growth at 4%, and then loan interest rate at 6%. Assuming all this is taken into account, we have a cash flow neutral position before any tax incentives by 2037. And at that stage, we'll have a total equity value of $725,000 here. After a 20-year period, total equity value of 1.47, say almost 1.5 million. Over a 5-year period here, we will have just under $180,000 in equity, of which you may be able to use to reinvest into another property. So thanks everybody for watching. If you do have any questions, please don't hesitate to reach out. Again, please don't take this as specific advice. It's only general in nature going through this area. I'd love to have a chat with you if you do have any questions about what investing in property can do for you and your financial situation. I'll leave the link in the comments and look forward to speaking to you. Thanks again.